Hi Mad family, the RBA has made the announcement, cash rate has remained on hold. Let's go inside and check it out.
Now what does this mean? Hope you're all great.
The home price index data shows that home values in Queensland lifted by about 0.5% in September 2025 alone. I mean, there's definitely certain suburbs in Brisbane, for instance, where did you see Carina went up 3% in the most recent month? Pretty crazy stuff. In particular, for the state capital Brisbane, the median price hit a record high of $952,000 and grew 10.2% year on year. Regional Queensland, the quarterly results show that houses went up about 2% over the last quarter, 8.1% in the year. Unit values went up similarly about 2.5% in the last quarter and 7.4% in the last year. But I reckon that's probably going to start to shift quite dramatically, especially with the government guarantee scheme that has come out, which you spoke about in the last RBA announcement, where anything less than $1 million requires only a 5% deposit. And most of the stuff now, especially in Brisbane, you can only really buy a unit and a townhouse for less than $1 million at the moment. So I reckon that will shoot up quite substantially. So many recent sales are showing ridiculous amount of money being spent. I saw a property sell for 1.8 in Mansfield, which was just a brick home on like a 550 square meter block, something around that. In Robertson, a property sold for like 2.8 million. Again, just a nice renovated brick home with some arches. Everyone loves the arches. So obviously a lot of the house prices are starting to get more expensive. So too are the loans that people are taking out. The biggest one though was first home buyer. Loan value rose by 5.7%. Especially because of this growth for anything less than $1 million. First home buyers are having to try and keep up with the market or at least pay in advance what they think the property will be worth, not what it actually is worth, but now starting to pay what it will be worth to try and lock in that contract. The variable rate is currently sitting around that 5.4%, whereas fixed rates at the moment, one of the more exciting ones is 4.99% for 2 years. A couple of the major lenders are offering that. But even if you look at the 3 years or 4 years or 5 years, it's still hovering around that low 5%. So maybe that could be a bit of an indication of where the rates will sit over the next few years. If we look at, the different policies that have come out from the banks, the key ones are mainly the ones for first home buyers and people with HEX debts as well. Like CBA and even NAB now have released a policy around HEX, where if, for example, you're on track to pay it off within 1 year, you can remove HEX completely from your borrowing capacity calculator. Otherwise, if you're on track to be paying it off within 2 to 5 years, then you can do a 1% buffer on your serviceability rather than the standard 3%. So that's starting to help clients borrow an extra 100 or 150,000, to try and get them into that more premium property, or again, to try and keep up with the property market. So in Queensland, the market is still going hot. Again, not much supply, but plenty of demand. So let's see what happens next year if there are any further cuts. Of course, we do look after clients Australia-wide. Each state has their own limit in terms of how much a first home buyer can purchase up to with a 5% deposit. So that's a bit of a market update, guys. Not too much gone in the lending policy space. Overall, guys, market is still hot, and that generally is especially within the spring period. The flowers are blossoming and the sun's out. So a lot more people hold out till spring to put the property up on the market. And a lot of people want to secure those properties to move in prior to Christmas so they can host their, Christmas parties. So let's see where things head.